Good afternoon, traders. My name is Tomasz Wiśniewski. I'm a chief analyst in All-Party Research and Analysis, and this is daily analytical report. So I will tell you what's going on the markets, and we'll try to look for decent trading occasions using both fundamental analysis and technicals. I'm mostly focusing on price action, so I'm a technical trader, but I do know that fundamentals are important. And what we do first, always before we even open a chart, is to find out what's going on from the fundamental point of view, check the macro calendar, and that's where we're gonna start. Maybe not with the chart, but with the calendar, as I said. So, as for Tuesday, you can see that the calendar is rather empty, so the biggest attractions are behind us. Maybe if you're an oil trader, you're waiting for the API data, which will be published at the end of the American session on stock exchange. But today is not very interesting in terms of the information that we got. Let me switch to this week, because we will also talk about the data from Monday. On Monday, we got PMIs from Germany, from Eurozone, which came worse than expected. But in the same time, we're still above 50 and with high values, 55, 58. Although it were worse than expected, it was still good data. We also got PMIs from US, which came better than expected. And so this helped euro dollar to reverse, to have a take profit action. This also helped the DAX to reverse as well. And on most of the instruments, what do we have is take profit action on, for example, gold indexes, but also on currencies, which are on those crosses with American dollar, where American dollar is gaining strength after a few days actually a few months of being, let me say that, hammered. As for tomorrow, what we'll have overnight, CPI from Australia, trade balance from New Zealand, that will be influential. And on Wednesday evening, the moment of the truth, event of the day, event of the week, I guess, even interest rate decision in US, which is expected to remain the same, but what most traders will be waiting for will be monetary policy statement, and that should influence the markets the most. As for the other data, GDP from US on Friday. So as you can see, this week, from the macroeconomic point of view, from the macro data point of view, will be all about Wednesday, where we have FOMC, and Friday, where we do have GDP number being shown from US. As from for the market movers, oil got a boost recently, yesterday, which was caused by Joe Bonning, right? I'm always telling that only obstacle for the oil to fall sharply is our verbal interventions from the OPEC countries, and we got verbal intervention from Saudi Arabia. They said that they will cap exports, that they will cut their exports. This caused the price of the oil to go slightly higher. As for the calendar, as for the fundamentals, that would be actually it. We do have still those talks between Trump and Republicans about the Obamacare. Trump's administration is having own problems with the investigation about Russia influence on the elections, etc., etc. But markets are immune to that at the moment, and they are focusing. Markets are shifting their attention towards Wednesday and Friday. So let me show you the charts actually, and we'll start with WTI Oil, where we had a false breakout above this horizontal resistance here and above the neckline. Because it was a neckline of the inverse head and shoulder formation here. Left shoulder, head, and a right shoulder. So we got a breakout, which could be perceived as a false breakout. Also, the price broke the lower line of the channel up formation, and it really caused the downswing, strong downswing, and the price tested first important support, so a crossing between 38.2 Fibonacci level and the uptrend of the recent bounce, which lasts from the end of June. Then Saudi Arabia came, and as you can see, that's just a pure speculation, because 1, 2, 3, 4, 5, 6, 7 bullish H4 candles in a row, and actually now we're gonna test this resistance again. I think we can remove this. Because it's no longer important, and what we can put here is this resistance, right? So we do have a contact here, here, and here. 3 points of contact makes this resistance a legitimate, potential legitimate resistance. It's an upper line of the wedge formation, which is bearish because the trend is bearish, and wedge is a trend continuation pattern. To be honest with you, I would love to see the price here. Oh my god, from the technical point of view, that would be a blessing. That would be a blessing to see a price here and a bearish candlestick formation. Why is that? We would have a combination of 4 important resistances, right? Upper line of the wedge, downtrend line, horizontal resistance from the price movements, and horizontal resistance from the Fibonacci 61.8. That would be really great to see the price there and to see the bearish price action there. Or on the other hand, you know, we are traders, we can go both ways. Even if I'm bearish on oil, I wouldn't have any problems to go long if I would have significant signals on oil. That's the thing with trading, and I think that's the huge part of why my real accounts are so successful, that I don't care if the price will go up or down. I just want to trade it, I just want to earn money on it. So, okay, if there will be a bearish reversal here, I can go short, why not? But if there will be a bullish breakout here of such an important resistance, that will be a strong signal to buy, and I shouldn't also hesitate to buy if I would get a bullish Marubozu here, right? You have to be open-minded in trading. In trading, do not focus on one direction, because remember, you're traders and you can actually go both ways as easy. You can sell or buy as easy as you can do the opposite thing. So that's the thing with the oil. I guess that, okay, fair enough, they can have their moment, but the first potential target is the blue line, and I would carefully watch for a bearish price action there. DAX is having a correction after a very bad few days when we started with the downswing. Here we broke a very important horizontal support here on 12,350 points. Then we broke short-term support, mid-term support on 12,300 points, and we broke a neckline. But now the price is coming back, and actually this comeback should be perceived, well, could be perceived as a false breakout. And you know what I think about false breakouts, that they usually lead to the movement in the opposite direction. But before claiming that, let me tell you one thing first. I don't think that head and shoulder formations with a neckline which is declining that this neckline is relevant. I don't think that this neckline should be respected as much as when the head and shoulder formation is like that, and we do have a neckline which is aiming higher, right, which is in a direction of the trend. Here the neckline is aiming lower, is declining, and I don't think that from the technical point of view breakout of this level should mean anything. So if there's a breakout of this level, it's not either a sell signal, it's not either a opportunity for a false breakout in terms of if the price would come back, right? So in my opinion, there is still sell signal here, but not because of a breakout here, but because of breaking this horizontal support and this horizontal support. So in my opinion, as long as we stay below the 12,300 and 12,350 points, below those two horizontal resistances, we do have a downtrend and we do have a sell signal here. The price can be just now coming back, doing a very technical comeback, so broken supports support becomes a resistance. That is just a typical price action. That is just a typical movement from the technical analysis. If you know this method, if you use it, you know that broken supports becomes resistances, and that's what we are having here right now. And it's also take profit action from the global sentiment of take profit action. Let me show you S&P 500, because S&P 500 made a small correction, but they didn't even touch the closest support, right? They were not even bothered to go 3 points lower. That's pretty amazing, and that shows the strength of the uptrend and the appetite for further upswing. So they had an occasion for correction on Friday and on Monday, but they were not bothered to come to this closest support, which was very nice. You have to say that this horizontal support looked nice. No, but they made their own imaginary one, let's say, and the price went significantly higher. So that is the current sentiment on S&P 500, on American stocks. We have to remember that the season of earnings is here right now, and S&P 500 will be influenced by that most definitely. So again, here the chances that we will make new highs, well, we are very close to the new highs, but chances that we will make them are very, very high, and you shouldn't be surprised. Here I would be looking for a reversal pattern on one of those resistances, and oil, I'm waiting for the oil to get there, and if the price action will be bearish there, I will short everything which I can. Obviously using money management rules. I'm joking, I'm always following money management rules. I'm not going over the limit, never. And now Forex market with commodities. First I will start with gold, because the situation is very interesting here. As you can see, we had this reversal from the middle of June, of July. It started with head and shoulder formation here, and the price created channel up formation, right? And we went to the very important horizontal resistance here. It was a support at the end of May, at the beginning of June, in the middle of June after the breakout, it became a resistance and a resistance, right? And as you can see, the resistance, it did not happen by accident, but we do have a reversal pattern here. So there is a left shoulder and a head and a right shoulder. And we are actually breaking the neckline here. And the first target of this movement was the lower line of the channel up formation. But in my opinion, they shouldn't be happy with that. They should aim lower to this point, $1,244 per ounce. That would be a natural correction for them, because now it's very flat. And let me check the Fibonacci's, and later I will also like to check another thing. So as you can see, it's not really a strong correction because we didn't even retrace 23.6. I want to check if this correction, if we do have correction quality patterns. Well, yes, we do. Do we have with this one? So yes, that is a very interesting thing. That correction in this uptrend was $10. That correction was $9.50, and this correction was $9.70. So around $10 correction quality pattern. So this actually can be a strong support, right? We do have a combination of correction quality patterns and lower line of the channel up formation, right? But as long as we stay below the neckline, the sentiment is negative here, short term, obviously. All right, next instrument. Let's go to majors, British pound. We can see a bit of reversal right now on American dollar. I'm wondering if anything happened, because the reversal looks kind of, maybe not strong, but it looks like it was affected by some fundamentals. Let me check if anything happened on the market, because as we can see, American dollar is significantly weaker right now. Maybe I will even turn on the dollar index. On dollar index, we do not see that. We are on all-time lows here. Well, we don't have any significant news here. Okay. British pound to American dollar, almost correction quality pattern here. Those rectangles, as you see, but it didn't work. That was a nice support here. We marked that with an arrow, but we missed. The price could go a little bit deeper. We missed like 10 pips for an ultimate buy signal. What I'm seeing here is inverse head and shoulder formation. We make that resistance more clear. So this horizontal resistance is in the same time a neckline, left shoulder, head, and the right shoulder, and an upswing. So we are above the neckline here. As long as we are above the orange area, the sentiment is positive. Euro to American dollar. Where we do have a new highs. So as you can see, everything is is proven by the dollar index, where they try to have a correction, but we are on new lows, which shows us the weakness of the American dollar. So maybe the correction is over. It was present, but it's gone. It was present on Monday in the first few hours of Tuesday, but we do have a continuation. And in our analysis on euro dollar, we were wondering how far we can go, and the first potential target is obviously here, right now, and we're gonna most probably test this bump here. Obviously highs from 2015 are here, but this one are very significant, and are just few pips lower. Actually, I'm wondering if that will break out here. Breaking those highs will trigger a momentum here, which will be largely based on stop loss orders of the sellers, which were fighting for this resistance. I'm wondering if it's gonna happen. So here high is 117.13, and here current high is 116.98. 15 pips to the local, to that resistance. If we will go to the border of this yellow area, that will mean that we have new highs. American dollar to Canadian dollar heading to new lows, not a surprise. They tried to pull a correction, but it didn't work out. Here we do have a very nice sell signal, downswing, trend continuation pattern, downswing, trend continuation, downswing, trend continuation, and now those trend continuation patterns are getting smaller and smaller, and this one, the latest one, is just a beautiful, absolutely amazing flag. I don't like it because it's on hourly chart, and I try to look for formations on bigger charts, but you have to admit it's beautiful. Also due to the fact that top of this flag is here, so the broken support becomes a resistance at the moment. I'm wondering if it will hold, but it looks really promising. So a breakout of the lower line here of this support should trigger a sell signal. Now Australian dollar to American dollar, we had a also correction. American dollar was getting stronger, but this inverse head and shoulder formation and the neckline are an invitation for a further upswing. American dollar to Mexican peso, here is a nice occasion, guys. The full downtrend, you know why I was telling about that pair for a long time, and we got a correction, and the price is now just making a bearish engulfing on a horizontal resistance. I wouldn't be surprised if that was also an important Fibonacci level. 38.2, why not? Slightly lower. So entering with a short position here with a stop loss somewhere here, that would be a very technical situation, which you would see in many books. Because it's just how it is. It's how you use those setups. It's how you have the best risk to reward ratios on your trades. Next one is silver. Silver bounced from this resistance that we highlighted on our trading sniper video and in our analysis. That's a combination of three resistances as well. Uptrend line recently broken, downtrend line not broken, and a horizontal resistance here. The price went just to the lower line of this rectangle that we marked, and went to the correction side. But now, as you can see, this weaker dollar We are having a reversal, and it's helping silver. Obviously, it's also helping gold, as you could see. American dollar to Japanese yen. Here we have battles of two weak currencies. That is why no surprise that we are having this kind of candle. We had a doji yesterday. We had a candle with long shadows here as well. So traders just cannot decide when they compare those two. Emerging markets, not emerging markets, but safe haven currencies, both which are weak all over the globe. And here we're just waiting for the situation to develop, but from our analysis from the last week, you know that we are slightly more bearish. And that's interesting one, because we are telling about the bearish situation somewhere here, and the price declined very sharply. American dollar to Polish zloty. Here we do have a continuation of the channel down formation, and I would personally love to see the price here on this orange support. But I think I have to wait for that. Euro to Japanese yen. Watch for the signal. Wait for the signal here from the pennant formation, from the symmetric triangle formation here. A breakout of one of those lines, one of those red lines, should trigger an important sell or buy signal, but a good trading opportunity regardless of the side, because again, remember, your traders can go both ways, no problem with that. Australian to Japanese yen, and below a neckline of this inverse head and shoulder formation. Maybe weekly chart from the last week does not look good, but as you can see, traders are not very worried about that, are not very worried about the correction, and maybe, probably, we'll have a second attack on this resistance. New Zealand dollar to Japanese yen is having the sideways trend. We are waiting for a continuation here. We are waiting for either a breakout of the horizontal resistance or deeper correction. British pound to Japanese yen. This positive sentiment on cable can be seen here right now. I thought that this resistance will be working more a little bit, but maybe price coming above here, that's an opportunity for the buyers to buy because of the false breakout here. Also, what I'm seeing, that's a good one. That is a good trading signal. That's an inverse head and shoulder formation. Inverse head and shoulder formation, breakout of the neckline, come back above the horizontal support. That's a good occasion to buy. What do we have here? 100 pips of support around 110. Remember that British pound to Japanese yen is a very volatile pair. It's moving like it's crazy. In Poland we call it a slaughter, because that's what this pair does. I hope that nobody from you got hurt by this British pound to Japanese yen. It's definitely an interesting one, right? If we consider that as a false breakout, and this false breakout is in the same time an inverse head and shoulder formation, that can be a very good trading setup. I will leave it on my chart, and I will try to think about opening a position here. Obviously, if I will have other signs supporting my view. Because as you can see, for example, this pair respects head and shoulder formation here also, left shoulder, head and right shoulder, and the price moves like that. No problem for the price to do that. Thank you guys very much for attending daily analytical report. I hope you enjoyed that, and now we're having a short break, and after that we're gonna see each other on a webinar with Alpari, where I will teach you how to trade. Actually, I will teach you how to trade. Let me just verify today's topic but most probably it's price action. So my favorite is price action. That's what I do. That's what I use for trading, where I feel confident because I know that it brings profits. Yes, we do have a price action webinar, which will start in half an hour. See you then. Thank you guys very much, and goodbye.